Can a tiny company fighting back against naked short sellers has chance to win? The CEO of Created Inc., Jeremy Frommer, has announced that he's targeting naked short sellers. Here's how this could affect GME and AMC shareholders too. Microcap company Created has been taking steps to protect its shareholders from abusive trading practices such as naked short selling. According to the company's CEO, naked short selling has become a toxic lending environment among microcap companies. Naked short selling has also been suspected in AMC and GameStop shares.
Called naked shorts, the illegal practice of short selling a stock without actually locating that stock.
Naked shorting was made illegal after the 2008-2009 financial crisis. So the big question is, why is this still happening?
Naked short selling.
Naked short selling is why it's bad.
Why Created is going after naked short sellers. This holding company in the communication services industry that provides opportunities for brands and creators to multiply their impact across platforms, people, and technology suspects that naked short sellers have severely attacked them. The company, headed by Jeremy Frommer, has a market cap of $22 million and was recently delisted from the Nasdaq. Created failed to meet the exchange's minimum bid requirements because it trades below $1 per share. Currently, the company is traded on over-the-counter (OTC) markets. But recently, Created drew the market's attention after an announcement that it would engage with market surveillance firm ShareIntel to protect its shareholders from naked short selling activities. ShareIntel uses a SaaS, software as a service platform that provides public companies with access to shareholder position movement and settlement data. According to Frommer, it's necessary to take a closer look if a company and its underlying stock are being targeted by illegal practices such as naked short selling. Furthermore, the CEO promises to escalate this topic to the top level in the financial markets. Quote, "I intend on escalating this issue to the highest levels of the financial services industry to protect the integrity of the capital markets, especially the more vulnerable entrepreneurial, growth-oriented stocks," unquote, said Created's CEO. Why is naked short selling a death sentence? During RHK Capital's recent Disruptive Growth Conference, Created's CEO Jeremy Frommer spoke about the nefarious practice of naked short selling. He mentioned that from United Airlines, UAL, at the turn of the 21st century to GameStop, GME, and AMC Entertainment, more recently, the practice of naked short selling has wiped out the reserves of many American workers. It has destroyed their pensions and eliminated their jobs, from pilots to bag handlers to grocers, to technologists and scientists working for life-saving medication. Also, according to the CEO, the illegal trading practice is weakening the financial strength of the underlying companies. This has led to a toxic lending environment. Who pays the price? Naked short selling can be a death sentence for a company, irrespective of the company's intrinsic value. "I know that it nearly killed my company," Frommer said. Finally, Frommer reiterated that it is almost 2023, and still no authority has addressed the issue. His criticism also said that in the last few years, what had been just an agreement between a few stock loan departments has become an institutionalized technology-driving money-making machine. And it does not matter if they get fined millions or even a few billion. They are treated as line items. It's just another cost of doing business. Naked short selling in GameStop and AMC stock investors have long urged greater transparency across the market. And with their holdings being allegedly directly harmed by practices such as naked short selling, it's not hard to see why. One of the indicators that raise suspicion of odd trading activities is the failure to deliver FDD data. FDD occurs when one of the parties fails to fulfill its obligations on the settlement date. However, this metric is closely associated with naked short selling. This practice generates so-called phantom shares that don't exist, potentially harming the liquidity of a shorted asset and diluting its share price. As can be seen in the chart below. In Figure 2, GameStop shares failed to deliver and at high peaks between May and August, surpassing the 1 million share mark on certain trading days. When looking at AMC's FDD data, the numbers are much higher than GameStop's. Throughout this year, failure to deliver exceeded 9 million shares in a single trading session in June, and several other times past 1 million shares, until as recently as November. See below. With such high FDD numbers in AMC stock, the huge community of AMC apes on Reddit believes that the cinema company's stock has been hurt by predatory short selling practices, such as naked shorting. In the middle of this year, AMC created the AMC Preferred Equity (APE) unit as a non-dilutive dividend. Their main purpose is to add value to AMC, but APEs can also serve as a kind of share count for the AMC's total shares. APEs may shed light on the use of synthetic shares by AMC short sellers, as AMC CEO Adam Aron himself pointed out. The bottom line: naked short selling is certainly a controversial subject. Some market participants see the practice as not harmful and believe that its prevalence has been exaggerated. Others see the practice as a confusing and harmful trading practice. Yet none of the issues regarding naked short selling in stocks like AMC, GameStop, and microcap stocks have been either confirmed or clarified by authorities. However, the U.S. Securities and Exchange Commission, SEC, has announced a proposal for one of the most significant market structure reorders in recent years. The proposal involves improving the competition between market makers and payment per order flow practices. Recently, market-making companies like Citadel Securities have been the subject of a lawsuit by biotechnology company Northwest Biotherapeutics, NWBO, for allegedly illegal trading practices such as spoofing. Spoofing is a manipulative practice in which a trader issues an order but then cancels it before it is executed. Here is the Twitter post of AMC CEO Adam Aron. Candidly, I've seen no evidence so-called fake or synthetic shares exist. But many of you disagree. This preferred equity dividend goes only to company-issued shares. So, it will have the impact of a share count or unique dividend many of you have sought. Events like the meme craze have helped bring more public interest regarding trading structure. This is a good thing, because it's pushing authorities to take a closer look at these issues and hopefully provide more clarity as soon as possible. Last January 27, 2023, a group of investors, along with Created CEO Jeremy Frommer, with the support of company CEOs, congregated and made a peaceful protest in Washington, D.C., in front of the SEC headquarters to bring awareness of their plight to end this illegal naked short selling. There is an ongoing lawsuit pursued by CEOs working alongside legal experts such as James West Christian and his law firm. This video was made to support their efforts. We are hoping that retail investors will take the initiative and proactively join this crusade. Your comments and support are much appreciated. More importantly, sharing all the videos of the campaign against naked short selling is one of the most effective ways to get the awareness and numbers of support growing and our voice louder. After all, it's free, it's easy, effortless, and safe. Thanks for watching. Please share.